Good morning, everyone. It's Monday, the 14th of January 2013. Still getting used to the idea of saying 2013. I usually slip and say 2012. I guess everyone has the same trouble this time of year. I hope you all had a great weekend and a very relaxing one at that. But as usual, it's Monday morning and it's time to get back to the grind. Taking a quick look at the economic calendar later on today, we have Ben Bernanke giving a speech about the state of the financial crisis. On Tuesday here in the UK, we have core price inflation data being released, which has always come out well above the kind of target level and usually above expectation too. We have the kind of inflation that the Prime Minister of Japan would be quite proud of, well above his target level. Tomorrow also we have US core retail sales data. Thursday we have a Spanish bond auction. As well, we've got a lot of key data this week coming out from Australia and as well from China. Australia will be releasing its home loans data, and labour force data in China will be releasing its fourth quarter growth figures and its latest industrial production and retail sales data. So although a relatively light calendar in the main, there are sufficient kind of trigger events to be kicking off some volatility, and it's that volatility that we need when we're looking to try and make some money out of those price movements on screen. We're just going to work through a handful of pairs this morning. I want to take a quick look at the developing story on the yen and the yen crosses. We're going to take a look at Euro GBP and the pound Swissy, which have been my favourites pretty much over the course of the whole of 2012, and it looks as though that will be a continued theme this year. And then toward the end we'll probably look at the Euro AUD and maybe a couple of other crosses there. Alright, so let's get going. What's happening on the yen crosses? And if we're taking a look at the USD JPY over the course of last week, she continued to move higher, pretty much in line with expectation. She's now rallied to the tune of almost 1,200 pips from her last base. And as far as the nearest support area is concerned, we're looking at this region which is coming in around the 80 extending all the way to 87.33 region for support. So it's this kind of cluster block which we've got here. We can see the price broke higher, pulled back. She made support in this region. So from a technical perspective, as long as the price is now remaining above this block, then this instrument remains very much a technical long. And sometimes it happens that you see a rally which is quite a persistent rally, like we've seen here on the USD JPY. It's to the tune of now 1,200 odd pips from its base, which is a very, very significant move indeed. And sometimes when you see that kind of rally, you start thinking, well, she's come so far. There's got to be a correction due, right? Put your hands up if you've ever felt that, right? So there's got to be a correction due, there's got to be a correction due. And what happens is that you start fighting the trend and you start taking counter-trend trades off the back of this idea that, surely there must be a correction which is coming now. And what tends to happen is that correction doesn't come. And there's a bit of a lesson in that, which is that, if an instrument is trending and you're seeing momentum develop in a particular direction, then what you ought to be doing is assuming that momentum is going to continue. Do not be assuming that momentum is going to reverse, or there's going to be a reversal, or there's going to be a steep corrective move. If there is going to be a steep corrective move, let that start happening first. And once it starts happening, that's when you start getting interested in kind of taking those counter trend trades. And so until you're seeing momentum develop to the south side, don't be automatically fighting this trend, don't be automatically fighting the kind of price movement that we're seeing here. This block which is coming here in the upper 60s, lower upper 86, lower 87, this block which is highlighted, I think it is the kind of key structural area now as far as the most recent momentum is concerned. It's just above that annual open price, so I've got that marked here at 86.47 on my screen. And so if you're looking to use that kind of annualized strategy in conjunction, then again from a technical perspective, as long as the price is above these levels, then I would consider USD JPY to remain a technical long. Only a breakdown below that level, then I'd be thinking, okay, you know what, maybe there is something there's something happening here, and there's going to be a much more significant follow through. So it is very much the key area to be watching and keeping an eye on. We can see structurally it's very, very clean. Keep thinking long until she gives you reason to actually start thinking short. Again, the kind of caution is not to be fighting the momentum that has developed. There is some talk, and again I think I mentioned it last week, that this break could just be a cyclical issue, but again, if it is a cyclical issue, you want to wait for that reversal first before you start taking trades in that particular direction. Right now the buyers are being forgiven and the sellers are being punished, and so if the sellers are being punished, then we ought to be punishing them some more. Right, that's the USD JPY code. If we take a quick look at the crosses, it's pretty much a similar picture. So we have GBP JPY, again a very, very strong trend, and we just want to be marking the most recent resistance area. The most recent resistance area would be an area that if the price corrects, you would expect that to turn support, and as well you want to be marking the established support area in this trend. So if we're looking for resistance, we've just got the previous swing high that the price broke through. That comes in around the 42.50 area, and as well we have the most recent support which is coming in around the 39.80 area. These are your two kind of critical levels for the GBP JPY. As long as the price is remaining above the previous resistance that she broke through, then it would be fair to expect for the price to continue to break higher. If she ends up breaking down below that level, then you would expect that you have your kind of corrective move in play, and if she ends up breaking down below the established support, then on a pullback you'd be looking for that to become resistance, and at that point you'd say maybe there's room for a little bit more of a significant correction to the downside on this instrument. Otherwise, again, we continue to maintain our long bias. The yearly opening price on this instrument came in around the 40.65 area. Keep an eye on those weekly opening prices as well. It is Monday, so we're quite close to that weekly opening price, and you just want to watch, is the week bearish, in which case you might consider it corrective at this stage, or if it happens that the price ends up breaking up above the weekly opening price, then you would say, right, it looks like we're getting another bullish week, and at that point to start giving chase to the price movement, which is a strategy which has paid off very reasonably well over the course of the last few weeks and months on these instruments. Euro JPY, again, very much a similar picture. She's continued to give those bullish breaks, and as long as she's giving bullish breaks, we will carry on buying the rallies. Note here just the caution in those terms, right? That you don't necessarily want to be buying the dip, but if you see that she is rallying, you're better off buying the highs, looking for that rally and that momentum to continue, and necessarily then kind of buying the dips, because if she's falling, there may always be room for her to be falling a little bit further than a little bit further. So once you see her breaking in the direction of the trend, that is, or it tends to be the best time to be getting involved. As far as structural support is concerned here on Euro JPY, I'm looking at this price region which is coming in between 1756 and 1784. So there's some structural support here in that region, and as far as the kind of nearest level is concerned, that is the area that if the price were to breach it, I would consider in the near term, in any case, for there to be a shift in the kind of near term, short term bias on this particular instrument. Okay, let's turn towards the Euro GBP and the pound Swissy. So here we have the pound Swissy. Again, last week we were discussing about this in the sense that looking for continued move to the downside. Again, she fell quite significantly to the tune of almost 300 odd pips last week to the downside, and as far as the bias is concerned, our downtrending line continues to define the trend on this particular instrument. So this is a line which has held now again over the course of several months now. We're going back almost 6 or 7 months since we drew this line, and we've continued to sell the rallies on this instrument and to maintain a southerly bias. I continue to hold that bias as long as the price is remaining below the wall. I'll be looking for extensions to the downside. The only thing that will change my bias on this instrument is if it happens that the price ends up breaking above that wall, then that will have me sitting aside. I'm not necessarily going to chase it north if she breaks the other side of that wall, but it will have me certainly sitting aside on this instrument, waiting for structure to establish. And what I would want to see if the price breaks the other side of that wall is just for some support structure to establish, so that I know, or at least it gives me some indication that this isn't a bullish rally in a bear trend. Rather, we've got some support structure which has been established, giving us a structural indication that price is now prepared to head in the other direction, right? So as far as the bias is concerned, my net bias remains south on this. I will continue selling the rallies on this instrument. If it rallies, sometimes it helps to see her breaking back down before you start chasing. That's always good on this instrument, and that is what has allowed us to kind of get in on the right side with the wind in our sails, right? So if she rallies, just look for her to start breaking down a little bit. She starts breaking down a little bit, assume that the bear trend is continuing, and you get involved in the stage at that moment in time. So we'll continue to use that trend wall. Above that trend wall, then the analysis is invalidated. Above that trend wall does not mean that it's an automatic long. Rather, we want to see some structure established. Once we've got some structure established, at that point we can look at giving chase to the instrument once that's happened. Let's take a look at the Euro GBP. Euro GBP, absolutely fantastic as far as mapping the price is concerned. This is one that we've chased now for almost 6 months, and practically it's been a case of week after week, month after month, she's done exactly as we expected. We marked off the 79.50 area all the way back in September. The expectation was that she would break up, she would pull back down, she would break up, she would pull back down, and then the expectation was that she would make a run for it. She hasn't made a run for it. My kind of thinking was that she would make a run from here and would get a movement pretty much in a straight line up towards the 85 handle, but she's decided to take a slightly different path. What we're not seeing though now is a return to that 79.50 area. So my trade recommendation on Euro GBP is that I'm very much a happy buyer on this instrument. Again, last week it was a case of just waiting for that rally. Once we saw the price breaking north, we ended up loading up positions again on this instrument, and I'm fully loaded all the way from about here, right? So I have positions in all over the place, but about 7 or 8 positions in long on this instrument. My expectation now for the Euro GBP is that we've just got to kind of watch this on the daily now to be able to see the bigger picture about what's really going on. But my expectation is that we have this cluster here on the left hand side, and we have a resistance which has been established here at 85, and that is going to be the upside target for this particular instrument. At this point in time, I would not expect a deep retrace or a pullback, right? So, we've had lots of pullbacks here over the course of December, November and December. We've bought every time she rallied north, we've bought again, and my expectation now is that she's going to rally pretty much straight up to that 85 target, and she's going to make some strong moves up to that target. I'm not looking now for this type of a move like she demonstrated at the tail end of last year, right? So if you're getting involved, it's just a case of risk definition. We have a resistance that the price broke through, and that comes in around about there, so we're kind of looking at that high. If she does retrace, I would not expect her to retrace much deeper than that level. So if you are getting involved in this trade and you're buying, then your stop needs to be below that level. For my added positions, I have a stop in around about the 80. I have a stop coming in just above the kind of annual open. I think it's around about 81.10 area, around about there, which is a collective stop that I have for a lot of positions that I've got loaded on. But if she's breaking back down through that previous swing high, so through that resistance level, because we would expect ordinarily for that resistance to become support, then at that point you're going to probably find yourself dumping out of any Euro GBP longs. But like I said, my expectation is now for a little bit of a run up towards that 85 handle, and I'm thinking even she's going to make her way through it, but once she reaches 85, I will be profit taking on these instruments, right? So in fact, I'll show you the positions on Euro GBP, because it's built up to quite a nutty it's built up to quite a crazy picture on that. Let's just have a quick look. Give me a second, folks. So those are my positions on the Euro GBP. Right? So you can see we're in there quite heavy. We're in there quite heavy. Pretty much fully loaded up on this pair. Just looking for that trend to continue. So last week when we saw her rallying, we ended up buying as she rallied, looking for that rally to continue. You can see the kind of wisdom in taking that approach, right? So if you have an expectation that an instrument's going to break north, once it's breaking north, that's the best time to get involved. Because you can expect that it will continue breaking in that direction. In a similar sense, if you're expecting for an instrument to break south, then you would get involved expecting for the break to continue in the direction, or expecting for the break to continue down, right? So that is the strategy that we're employing on Euro GBP. It's the same strategy that we're employing on the pound Swissy. You just have to watch your exposure a little bit between the two, in the sense that you don't get involved in both of them at the same time, because they are inversely correlated, right? So as long as we're expecting for the Euro GBP to be breaking north, we can continue to expect for the pound Swissy to be breaking south, and anytime we get a good technical ground for taking an entry, we will continue to do that. So that's the Euro GBP. Okay, up for some kind of general notes on some of the majors, and then I want to take a look at the Euro AUD. In fact, let's take a look at the Euro AUD first, because it looks as though on the Euro AUD there's some kind of a broadening structure going on here, right? So This is still very, at the moment, I'm not kind of pushing for a trade on this just yet, right? So, broadening structures sometimes they can be, they're not necessarily always that reliable, right? And I'm not the best person either at picking them out, but if it does turn out to be a broadening structure, ordinarily what happens on a broadening structure is that the price ends up moving between the levels, right? So if here and I like this particular structure because of the way that it's established. So we're using a couple of resistance points to establish it, and equally we found resistance at that level there. It seems to be very symmetrical, and as well it seems to be to the point, if that kind of makes sense. So we had kind of two levels here, connected the line, and we've got our upper wall, and we just connected the lows, and we've got our lower wall, and the reaction seems to be to the pip, right? So if it happens, and sometimes you see the price consolidate under that structure, but if it happens that she starts breaking down, then at that point the expectation would be that she's going to go and test the other end of the broadening structure, which to the downside, right now, that looks like 700-800 pips to me. All right, it's a little bit crazy, but it's one that I'm keeping an eye on. I have an expectation that she would end up playing between these levels, but again, it's more a case of when you get these types of structures, you have to let some part of that expectation play out first. Once you're seeing that expectation play out, at that point it's easy to get excited, and at that point it becomes easy to get excited and start chasing the price towards your expected target. All right, so that's just one to be kind of keeping an eye on. I think it is going to be an interesting play. We have over here 2707, which was our annual opening price. The price is hanging now below that level. As long as she remains below that level, she does remain a technical short on the annualized basis. A break above that level, that would very much caution the shorts. All right, so just keep an eye out. We do have just above that as well an SR flip area, and so you would expect again some kind of reaction around that 2740, 2750 area on this instrument. Okay, let's take a quick look at some of the other majors. Euro USD, last week I was taking blind shorts on this instrument around very much near the low, in fact. So I was in around this kind of price area in those lower 30s, looking for a short, and that was a short which was built, and I explained last week, not on any kind of technical issue. It was a blind short, not based on SR, but just based on the fact that 132 is the annual opening price on this instrument, and from a technical perspective, looking at the annual candle, looking at the yearly candle, you would say, well, if the yearly candle's facing down, then why not look for extensions to the downside? Right now, and it happened last week, the price broke up and stopped me out of that position. Now she's up above the 32 handle, and on the back of that, I would expect for her to carry on north. All right, so again, not really looking at any kind of structural issue. We're just looking at the proximity of price to the yearly open. Using that strategy at the beginning of the year, it's something that can end up costing you sometimes 2 or 3 times, but it's all about the way that you play it. So you take a very, very small position, and then if she does end up breaking or breaking out for the year away from the yearly open price, then you're looking at adding and adding again and adding again, and then over the course of the first few months of the year, you could have ended up building quite a substantial position on the back of a yearly trend, or on the back of chasing a yearly trend, just simply based on the proximity of price to that yearly open level. All right, so I've been stopped out on the short. I'm now considering I'm now considering taking a long position on the Euro USD just on the back of the annualized strategy. Like I said, it's all to do with how you take the approach. So it's got to be a small enough position size to be able to face kind of going 2 or 3 times. The worst thing that could happen is that she just ends up sitting at this price, so breaking above it, breaking below it, breaking above it, breaking below it. If that ends up happening, maybe after 2 or 3 times I'll give up on this strategy, but for the time being I'm quite happy to kind of pursue it. We seem to be getting a momentum break north at the moment, and so that's something that I'm going to consider giving chase to, only this time maybe I will tie it in with some element of support and resistance, and not play blind, as they say, once bitten, twice shy. Taking a look at GBP USD, we marked a couple of levels last week. We talked about these 2 levels, 61.30 and 61.70. Last week the price ended up pulling back toward the 61.30 area and collapsing, and again toward the tail end of the week she pulled back to the 61.70 area, which seems to be holding up fairly well as resistance, and so as long as 61.70 holds, I would be looking to the downside on this particular instrument. A break through the 61.70, that would have us looking at a kind of another bullish move, and that would be the point at which now, if you're considering adding long, that you would consider adding long. So I'm still looking at resistance in the last wave, and looking for a continuation of that downward momentum in cable. The areas that we had marked seem to be holding up fairly well. If you're looking for a continuation of the bullish swing, which is viable because of the kind of range that she's in, so it wouldn't be an unreasonable idea, then it looks as though you have support established at 60.85, and that would be the level that you'd be looking to hold on this instrument. The pound Swissy, again, it's quite an interesting move on pound Swissy, and it's the pound Swissy that has me wondering about the Euro USD, whether that bullish momentum is going to continue, which is why if I take that entry north on Euro USD, it's got to be something which is a little bit more structured now around support and resistance. But we have 91.44, which is the annual opening price on this instrument. We had a little bit of a kind of bearish collapse last week, and we're seeing resistance established around the 91.77, 91.80 area. If it happens that the price ends up breaking up through that, then you can be looking at kind of holding a long bias on the pound Swissy, right? So from a structural point of view, it's about 91.80s for the bears. From an annualized point of view, it's 91.40. We're so early into this year. You have to be looking at both sides of the coin. As a very close friend of mine told me a couple of weeks ago, he said, you light one candle for God, but you've got to light one for the devil too. So Sebastian, are you here? I don't know, I'll have a look through the list in a while. He may well be here, I don't know, but I love that saying, and sometimes trading can be like that. You've just got to look at both sides of the coin, and ultimately use the price structure in order to establish bias and to be pulling a trigger. Okay folks, I think that is your lot for this morning. Like I said, this week for me is mainly going to be about the yens, looking for a continued break in that momentum. After that, it's going to be about the Euro GBP and the pound Swissy. Euro GBP mostly just managing the existing positions. Pound Swissy, I'm going to look to kind of get involved in that once I see the price breaking down, and see if I can chase her lower, monitoring that position on the Euro AUD with that broadening structure. If it happens that she ends up breaking down and she's heading away from the upper wall, then I will start assuming that she's heading down towards the lower wall just needs to see some resistance structure established there to confirm that she's going to play out between that broadening structure. Have some general analysis on the majors, but not necessarily one which is going to be triggering a trade. And aside from that, I think it's just going to be a case of sticking to the plan and hopefully pulling out a generous number of pips. Thank you all very much for attending this week and participating in this webinar. Thanks as well to the team at FX Street for providing the platform. If you have some time, then do check out my website. Just as a point of note, we now have over 1,000 registered users who are checking in on the site every week. So from a vanity point of view, I think that's really great. So do check out the website, and I usually post some analysis on there very early on a Monday before this presentation, so you're welcome to check that out. I also have a analysis service. I run a live blog where I post some trade ideas intraday and give out some general perspective. If you haven't signed up for it already, it doesn't cost a great deal, and certainly if you're looking at learning to trade and you're looking at how it is that you take these ideas, which sometimes can be theoretical, support, resistance, support turning to resistance, resistance turning to support, buying the rallies, selling the dips, all of these kinds of ideas. You want to understand about how to put those into practice and what it looks like on screen. That's what my live blog is all about. So we take some very, we kind of take the cleanest, clearest technical examples and look at applying those ideas in our trading. So do check it out, sign up. It's a commercial project, that's what it's there for. And yeah, that would be great. Okay, folks, that's your lot. So once again, thanks very much for attending, and I'll see you all next week. You can pre-register for this webinar. FX Street will send you out some email alerts to let you know it's happening. So if you don't want to miss it, that would be the best course of action to take. So until next week, just have a great trading week, and I will see you all again. Thank you.